We will have our report from Detroit with General Motors Chairman Jack Smith in a couple of moments. Before that, though, a good friend of this program joining us to talk about what it'll take to get the markets going and moving back up with some consistency. We're going to go to Boston, where Jack Shaughnessy, the Chief Investment Strategist at Advest, is standing by. Jack, good to see you. Happy Monday.
Well, good morning, Jack. Happy New Year.
Yeah, what the hell was that last week in the stock market, Jack? Give me your take on that deal.
Well, certainly, I was surprised, obviously, with the way the market, first of all, responded positively when the Fed cut rates by 50 basis points. But then later on, there were a number of people who were quite concerned that, notwithstanding the fact the Fed was going to be cutting rates, the economy was still going to be recession risky. And also, too, there were concerns being expressed about the earnings prospects as well. But quite frankly, I think that's really a very short term. The people are raising the issue about the lag between the changes in monetary policy and before we start seeing effective results.
And what kind of lag are we looking at here?
Well, perhaps some people have suggesting 6 months, but I don't believe it will be that long. Because what we're going to see, I think, is a combination of, first of all, the Fed will be cutting rates again on January the 30th, 31st, by another 50 basis points. And I think at the same time, I think Mr. Greenspan will be supporting President-elect Bush's proposal to cut taxes by $1.3 trillion over a 10-year period. So the combination of Fed rate cuts and income tax cuts should certainly bolster the economy, and that in turn should enhance consumer confidence, which in turn will help the economy.
So is this the time that investors ought to be aggressive in moving into the market?
We're definitely focusing on quality companies that have good management, where you're comfortable. Also, some of the companies who have multinational revenue sources, so obviously they'll benefit as to what's going on in Europe, relative, even if the U.S. economy is slowing, but you know, the European economies. But the multinational growth companies, as well as some of the energy companies and some of the tech stocks, still look attractive, in my opinion.
What tech stocks do you like? That's a kind of a minefield these days.
Well, certainly, we like Texas Instruments. That's one that's got the potential to grow at 25% a year. It's selling at about roughly 25 times estimated earnings for the year 2002. It's just other words, it's a multinational company, and obviously in good position to benefit from the growing use of microchips over the long term.
All right, in the energy sector, give me a name of a company you like there.
Well, as an example, we like Anadarko Petroleum, which is a quality exploration and production company. They produce a lot of natural gas, and natural gas prices are firm, and they'll be in good position to benefit from that.
The OPEC meeting upcoming, it looks like now it's pretty much a done deal that they're going to cut production.
Yeah.
What's that going to do to oil prices and therefore the energy stocks?
Well, it remains to be seen. Obviously, it remains to be seen that whether OPEC cuts production as much as they're talking about, that they were concerned because oil prices came down from $34 down to about $25, and they felt the oil inventories are quite high. But where the International Energy Agency has really been pushing hard against OPEC for cutting, because of cutting production. And Mr. Greenspan has said several times it's been higher oil prices, which of course have been hurting world economies. And I think OPEC, they might moderate production a little bit, but not significantly. But oil prices would certainly drift up a little bit. But I don't see them running much above $30 a barrel, because frankly, the seasonal factors for oil demand will be declining, obviously in middle of February. And that in turn will obviously keep oil prices under control.
All right, under the financial banner, give me a company you like. There's one there in Boston you're partial to.
Yes, indeed. Fleet Bank Boston, again, it's selling a good discount to the market. You've got 11% annual growth rate. You have a decent current yield. And also, too, they have good quality loans. They don't have a problem with non-performing assets. And all in all, I don't see recession being the problem. I think the economy will perk up over the next month or two.
All right. Well, let's hope so. Jack, it's always good to see you. Thanks for being with us.
Jack, nice to be with you.
All right, partner. Jack Shaughnessy, Chief Investment Strategist at Advest Incorporated up in Boston.